Welcome back to the bull ring, guys, and I have a new tutorial video for you to help you out in your trading journey. In front of us we have Tesla, and what I want to show you guys today is what is the difference between the 50-day moving average and the 200-day moving average. Which one works better? Which one should you be using? And why should you be using it? So let's get going on this. I want to show you something. Number one rule that a lot of people do in the stock market, especially in Wall Street. Okay. So one of the golden rules is the white line here. Let me start there. The white line here is our 200-day moving average. The green one is the 50-day. Okay, one of the golden rules is when the stock falls below the 200-day, as you can see here, okay, cross right under there and it continued to go down, and it went down for a while. When it crosses this white line, guys, okay, anytime it crosses down, you do not go long. You do not buy stocks. You wait. If anything, you can enter into a short position. Like you see here in Tesla, Tesla had a mean drop. And imagine if you had bought, okay, right up here, that would not have felt good. All right, for demonstration purposes, guys, I am going to turn off the 50-day, and I just want to show you when it crosses up, it's not a bad time to jump in for a long, but you have to be careful. You have to understand resistance lines, and we've talked about this in the past. Whoops. Right in here, you see resistance, resistance, and most of the time, and you can see here, we had 1, 2, 3 times that had resistance, and then it went back down. But not a bad time to jump in some longs here, but this is a great exit if you had bought, okay? And then look at here. You don't go long here, guys. Look at that, okay? Now, you can see right in here, Tesla, this is a great opportunity to go long, and a lot of people did. And that's one of the golden rules. If you're going to trade and you want to hang on to the stock for a while, guys, okay, these are areas where you can enter the stock and do well, okay? That line, the 200-day, is going to help you tremendously. And if I go backwards with Tesla, we can see that we've had quite a few falls here, guys, okay? Let's note these out. That's one, and then the stock went down. You did have a bullish run there, and then we had one here in previous days, okay? So this is a good way for you to enter the stock. And of course, if you're on TradingView, guys, you can use your measuring tools and just kind of estimate, okay, once it crosses the line, that's $102 up. How long is it going to stay up there, okay? Now, let's go back to the 50-day moving average. Now, what is the difference between the 50-day and the 100-day? Now, some traders do like to enter into their stocks early. So you see here, okay, if you were a day trader, maybe you're a swing trader, okay, this might be an entry for you on the 50-day. You see the stock ran up, okay, right in here above that line. And of course, it did cross down. So you have to make sure you stay on top of your trades. But some folks like the 50-day moving average. So what is the 50-day moving average? So in simple terms, guys, it is the last 50 days. What is the price of Tesla? What's been the average? And that's basically it. So when the 50-day moving average, okay, gets crossed by the price, meaning the price went above the average, that's when a lot of people like to start jumping in. And you can see there's a few episodes here where Tesla had the 50-day cross, and a lot of folks started jumping in. Same thing when it's going down. Okay. Once the average goes below, or the price of the stock goes below the average, a lot of people like to run. Why is that? Because you see up here, make this nice and clear. Okay. Right up here is where the 50-day crossed and started going down. So let's mark that off right in there. And guess what happens? The reason people start selling off is because now there is a fear that the 200-day moving average is going to be crossed. And sure enough, you see in Tesla here, people did sell off and continued to sell off. Now, you did have another episode where the 50-day started turning bullish, meaning the average was crossed by the stock price. So the price now is higher than the actual average. So of course, people will start to buy in. And sure enough, they did here. See that? Okay. Now, 50 days, it looks like it moves kind of quick in here, but remember, these are daily candles, guys. So it takes a while for this to happen. Okay. And you can have a little bit of volatility like you did here. You had some resistance. You had some fighting going on in those areas. And right in here is what we talk about when a stock consolidates. Okay. It starts looking like it's staying in the same area. That means that the stock is going to make a move, potentially in the opposite direction of the resistance, which you have right in here. Okay. Now, 50-day or 200, which one is better for you? 200-day moving average. I'll look at the price. And if the price has been under this line, obviously at some point you'll see that, hey, this stock is not moving up. But when it does and it goes above the 200-day, that is considered a great sign to buy the stock and go long. Now, which one should you be using in your investments? Now, let's back Tesla up a few years here, guys, and you can see, okay, you will have episodes where the stocks just go boom. Check it out. Okay, so Tesla just took off. And one of the things is, of course, right, when you cross that 200-day moving average, people want to get in, right? We crossed in here, and then Tesla just kept climbing up, climbing up, climbing up. Now, I'll tell you how I use it. The way I use it is once the stock crosses here, guys, okay, I'll jump in and I'll stay in the stock as long as the stock price stays above that price. I'm in. I stay in. But when this happens and it starts going down, I'm out. Okay. And you can see that's not a bad profit if you want to practice that. Now, if you wanted to go long in a stock, the 50-day moving average is a great average to look at and to get in early into a stock. Let me show you how you would use that. Okay, let's look at Tesla back in May, guys, of last year. We did see that it did cross and did go down on the 200-day moving average. Okay, it went under, actually went under here. And then it went under here on the 50-day moving average. It tried to come back up, had resistance right at the 200. But this is how you can use the 50-day and the 200 combined. Okay, this should be an alert for you. If you see this happen, it crossed the 50-day moving average. That means that the stock potentially is becoming bullish. People are starting to buy. And one thing that I look at is how close is the 200-day moving average with the 50-day, okay? If they're not far apart, then that is another sign for me that it is bullish. Now, when you come in here, my first thing is if we cross here, I'm coming in 30%, guys. I go in at 1/3, 30% of what I want to invest in Tesla. I start here. Here I'll enter with another 30%. And if the stock continues, okay, from here to here, if it gives me another equal length, then I'll enter with the next third and just hold it as long as it stays right above the 50-day moving average. Once we get to this cross, I will exit the trade. Okay. Now, a lot of people use the following. Okay. I use it when I day trade. When I have the moving averages that I've picked, when they cross, then that's an entry for me. Okay. Why is that an entry, guys? Because this is a major move. Even when it crosses on the way down, I'll go short on the stock. You can see there Tesla cross. Okay. And you'll see that when that happens, when that happens, you look at the stock price right around the 230 area. And then Tesla made it all the way down to the 180 area. So when those two lines cross, guys, it's a major move. Okay. Look at this here. When it went up and then both lines cross, okay, we started going up here. But when the lines crossed in here, look at the move. We went from 200 all the way to about $300, guys. Okay. So those are the ways you can use the moving averages, is just say, hey, look, I am going to enter in my position when they cross, or I can do an early entry with the 50-day, and then I can go long once I'm above the 200. So which is the best for you guys? Which is the one you should be using? The one you want. Okay. If you're an early riser, then maybe you're going to use the 50-day. If you're just someone that says, hey, I work full-time, I'm a full-time student, I don't have time to be looking at this chart all day long, then maybe you're going to use the 200-day moving average and enter and exit your stocks based off of that strategy. And I'll show you. Okay. If you entered the stock here in the 200-day, you're looking at the 200 range. Okay. So $200. Let's say you waited to exit here. You get an alert and you said, I'm going to get out when it falls below it. It's about 235. Not a bad actual profit, but you have the potential of getting these prices up here if you entered here. So for now, guys, I recommend that you take the stocks that you love and go add the 200-day, add the 50-day moving average, and just go look at how many times the stock crosses through those lines, how long does it stay up, how long does it go down, and which line would have given me the best profits. And that's the way you do it, guys. You got to come over and just study the chart and go back in history and just look at how many times we crossed and how many times it actually was profitable. Okay, if you're using TradingView, great platform. You can measure, like I said. Okay, you can measure up, you can measure down. Okay, and then figure out what are those numbers. So for now, guys, if you did find value in this video, okay, I appreciate if you guys subscribe so that way you get notified, and hit the like button and leave me a comment below and tell me what else or what other indicators you want me to cover. So wishing you guys a green year, guys. 2024 is going to be a bit of a roller coaster, but if you want to see other videos on other indicators, or maybe you want me to cover another stock, leave a comment below. But until then, wishing you guys again a green year.